Have you ever wondered how the stock market works? Picture it as a bustling marketplace, but instead of fruits and vegetables, it's teeming with shares or fractions of companies. Its role in the economy is paramount, serving as a hub where businesses raise capital by selling shares to the public. Investors, both large and small, trade these shares based on their views of the company's future performance. And that's the crux of it. The stock market is where companies sell shares, and people like you and me can buy and sell those shares. Now you might be asking, what exactly is a stock? Put simply, a stock represents a piece of ownership in a company. When you buy a stock, you're essentially buying a slice of that company, making you a shareholder. This means you have a claim on part of the company's assets and earnings. Companies can be divided into two types, public and private. Private companies are owned by a small group of people, like the founding team or private investors. Public companies, on the other hand, have sold a portion of themselves to the public through issuing stocks. This process is known as an initial public offering or IPO. Why do companies issue stocks, you may wonder? Well, companies typically issue stocks to raise money. This money can be used to fund research and development, pay off debt, or expand the business. Owning stocks comes with its own set of benefits and risks. One of the main benefits is the potential for financial gain. If the company does well, the price of its stock typically goes up, and you could make a profit if you decide to sell your shares. On the flip side, if the company doesn't perform well, the stock price might drop, and you could lose some or all of your investment. So when you buy a stock, you're buying a piece of a company, and your fortunes rise and fall with that company. Okay, so we know what stocks are, but how do we buy and sell them? Now, that's where trading comes in. To start trading, you need to open a brokerage account. This account is going to be your gateway to the stock market. Next, let's talk about brokers. They are the intermediaries who execute your orders. In other words, they're the ones who buy or sell stocks on your behalf. Now, onto the fun part, placing a trade. Once you've decided which stock you want to buy or sell, you place your order through your brokerage account. It's as simple as that. But how do you decide which stocks to buy or sell? That's where the concept of stock prices comes in. Prices fluctuate based on supply and demand. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. And that's how you trade stocks. You decide which stock you want to buy or sell, you place your order, and the broker takes care of the rest. So, let's recap what we've learned about the stock market. The stock market is a marketplace for buyers and sellers to trade shares of companies. It's an essential part of our global economy, providing companies with capital and investors with a slice of ownership and potential profits. Now, what are stocks? Stocks are essentially a piece of a company that you can buy. When you purchase a stock, you're buying a piece of that company's future earnings and assets. And how does trading work? Well, it's a process of buying and selling stocks based on market trends, company performance, and your own financial goals. Remember, trading isn't just about buying low and selling high. It's about understanding market trends and making informed decisions. Remember, the stock market can be a powerful tool for building wealth, but it's important to understand how it works before you dive in. Thanks for watching, and happy trading!